Hi, I'm Sushi. Welcome to my hut. Check out my Excel Wizard shirt. Pretty cool. I am an Excel wizard. I'm an accountant by trade, and I'm going to be going over Nintendo's financials. And as a reminder, Nintendo is currently operating under Japanese GAAP with a plan to move to IFRS. So, in order to get a proper reading, you have to go to someone with knowledge of accounting and finance, with knowledge of Japanese GAAP in particular. And as far as I know, I'm the only one out there with that kind of knowledge or background. So let's get into this. First thing, this isn't a financial thing, but the proportion of games sold which are digital has risen to 62%. We need to buy more on physical with the Switch 2 generation in order to increase our odds of having a physical as an option on Nintendo's next console. Now here's the really cool thing, the big news item that everyone's missing. Inventories for Nintendo increased by $490 million to $3.92 billion. That's an extremely high amount, equivalent to over 6 months worth of inventory. There are a variety of possible reasons for this. And by the way, they've been incredibly high for a very long time. One reason why this might be is that, in fact, the most likely reason is that they overestimated customer demand. They simply probably expected to sell more than they have. But another possible reason is that they are trying to build as many as possible before the prices of storage and RAM increase too much. They're trying to get these into warehouses so that they have a supply to sell without increasing prices even more. What these inventory levels mean for us gamers is that there are some good year-end sales that are coming. In fact, they're almost guaranteed. We're going to get some good deals on Switch 2's accessories, maybe even some games, perhaps some really good bundles. And this is something I said last quarter where we went over the yearly financials, but it seems even more likely than before because inventory levels have climbed even more and have persisted at an extremely high level for 3 more months than then. So, this is a big deal. Holding on to huge amounts of inventory in the long run is very expensive. It's very expensive to pay for warehousing space, especially warehousing space that's suitable for storing electronics. And holding on to large levels of inventory is just really against the principles of supply chain management and the DuPont formula. Nintendo will want to clear out some of this inventory and get Switch 2s and accessories into gamers' hands, because that'll not only save them on warehousing costs, but it'll allow them to sell more games and make more money. So next thing is the Pokemon Company posted $210 million in profit. Not revenue, profit. This is an extreme amount, incredibly high for this time of year because this is a slow quarter. Not a lot gets sold this time of year, so Pokemon Company is doing extremely well. This is very good for Winds and Waves next year, and Winds and Waves, we can take that to the bank. It's going to be an incredible system seller, especially looking with how popular Pokemon Company is. Research and development costs for Nintendo have risen to $1.2 billion a year, of which the vast majority is game development. Nintendo has built a new building to develop games and is continuing to hire and train new employees, new developers, to make more ambitious games at a rapid rate. In order to help pay for that, Nintendo has greatly reduced their marketing spending. Europe's share of console units sold has slid from 28% in the Switch 1 generation to only 22% for the Switch 2. This is a shocking shift, especially since Europe's proportion of console sales in Nintendo history has been pretty stable over time. And this shift has been spurred by economic stagnation in Europe, recession in some cases, and government policies, which have driven up the costs of Switch 2s. Many previously wealthy countries in Europe, like Spain, Germany, Britain, France, are most affected as their living standards continue to decline, especially in terms of disposable income. And this shift is almost certainly a permanent one. It's more of a fundamental economic shift rather than something cyclical. Now we have to talk about the uncomfortable matter of tariffs. And IEEPA tariffs refunded were around $300 million. By the time the tariffs were ended, 4.8 million Switch 2s had been sold in the US, meaning that Nintendo only paid $62 per Switch 2 customer in the US, or even less if you include purchases made by Switch 1 owners. There are a few things we can learn from this. One is that Nintendo was telling the truth when they said that they bore most of the costs. Another thing is that the tariffs were simply overblown and not a major issue for Nintendo's operations, especially compared to the cost increases induced by AI data centers. Finally, Nintendo's exports to the US averaged a tariff rate of between 7 to 10%, not the 25% that was often floated around by goons in the media or social media. And by the way, that 7 to 10%, that is a lower effective rate than what Nintendo pays to every single EU member state to import goods. The high cost of doing business in Europe, including an outrageous regulatory burden, is one of the reasons why the launch price for the Switch 2 among EU states was between 20 to 50% higher than in the United States. The takeaways here are that EU policies are part of the reason for declining Nintendo sales in Europe. And another thing that we can learn is that tariffs are, for the most part, a tax, much like other taxes. Tariffs do discriminate against imports, but when all consoles and games and accessories are imported into your market, in that case, tariffs behave much like a value-added tax, and are even calculated in a very similar way. So that's all from me. Look forward to some good Switch 2 sales later on in the year, probably kicking off October, November timeframe. And keep rolling.